What exactly is Fitch saying?
Fitch is saying I think most importantly, that they are concerned about the growing U.S. budget deficit. In fact, they see it getting higher and higher all the time, from about 3% of GDP up to over 6%. They're saying the rating downgrade reflects the expected fiscal deterioration over the next 3 years, a high and growing general government debt burden. And of course, there's more to it than that. They are concerned about the erosion of governance relative to the U.S. AA and AAA rated peers over the last 2 decades. They're talking about the debt ceiling standoffs that have led to last-minute resolutions, all kinds of angst back and forth in Congress, and at times hit the markets. So you can understand what they are talking about. And as Sherry just mentioned, the Treasury of Funding is one of the biggest things when it comes to government bond sales every quarter. The Treasury sells 3-year notes, 10-year notes, and 30-year bonds. The numbers have gotten bigger and bigger and bigger, and I'm sure that even though Janet Yellen, as she says, doesn't agree, she can understand the concern of the market. She says she strongly disagrees with the Fitch decision. The change by Fitch announced today is arbitrary and based on outdated data. So she is, I guess, not in agreement about how much bigger the U.S. budget deficit has gotten. But back to the Treasury refunding, it was supposed to be around $773 billion. That's still a lot bigger than the refundings used to be. It came in at $1 trillion. So you can see that this Fitch rating corresponding with that, the timing doesn't seem to be accidental. And you can see now that Moody's is the only one of the 3 top rating agencies that maintains the AAA rating for the United States. So if it were not for the fact that Trump, the big news we're coming out on Donald Trump right now, I think that this rating announcement would be even that much more of a burden to the markets. But we're going to see how this unfolds in the Asia trade.